So what are contingencies? When you write an offer on a property, you are essentially creating the first half of a contract. It is the contract document that, if signed by the seller, is in fact an enforceable contract. You're making commitments in exchange for commitments from the seller. Contingencies are the set of limitations that allow you the right to cancel that contract should some criteria, contingency, not be met. So for instance, you will have inspection contingencies. And in California, buyers are very well protected. You have the right to inspect a property and decide within, by default in California, it's 17 days, but that can be changed when you write an offer. You have the right to decide after conducting your inspections whether or not you'd like to purchase the property. You don't need to offer any explanation as to what you didn't like. There are too many variables, and it doesn't really matter. You are given the opportunity with an inspection contingency to inspect with a home inspection, with a pest inspection, to get maybe a roofer involved. I mean, you can do any inspections you want. You'll be responsible if you cause any damage to the property, but basically you can do all the inspections you need to do to be satisfied that the condition of the property is satisfying. And at the point you release that contingency, you no longer are able to cancel the contract for that reason without some penalty. Now, the penalty in contracts is usually described at some point as a liquidated damages or some agreed amount. And in most California contracts, liquidated damages is the amount of a deposit. So let's say you're doing your inspections and you release all of your contingencies, and then without explanation you cancel. Well, there's a very good chance you could lose your deposit if that was the agreed amount in liquidated damages. So the contingencies are the reasons you're able to cancel a contract without losing your deposit, without losing whatever that liquidated damages amount might be. And this is going to include things like an appraisal. So you offer $300,000 for a home and the appraisal comes in at $280,000. Well, you have an out in the contract. You don't have to purchase the contract. It didn't appraise for the amount that you had agreed upon. In all likelihood, you would negotiate some solution with the seller, but that is what allows you technically in the contract the right to cancel without penalty. Contingencies generally include inspection, appraisal, loan approval. If you're, for instance, unable to get the loan, you're also able to cancel. But at the point you release those contingencies, you are abandoning the right to cancel that contract based on those reasons. So it's important to stay ahead while you're in contract of those topics that are your reasons for canceling, because you're likely you will face some point during the escrow where you're going to release those. So you want to know the inspections have been done, we're good with the condition of the property. Or if you're not, you've agreed to the repairs. You've done the appraisal, it came in at value. The loan is approved, we're feeling confident and solid in the loan. And at the point you feel certain you're good to go, then releasing contingencies. If you delay on those, if you're not staying ahead of the inspections and the timelines in the contract come due, the seller is likely to insist that you release contingencies, make your money non-refundable. That's a very vulnerable place to be. You don't want to lose your deposit money by releasing contingencies when you don't know that something has been satisfied. So that's why it's so important to stay ahead of the timelines in a contract, because the other side, the seller side, is going to monitor those timelines as well and want you to release contingencies at that point in time.